Good morning, everyone. Welcome to the Brokers Daily Live Outlook for majors for Wednesday, 26th of October 2011. The key day today for the European Union, as today is the second day of the EU summit that was originally a one-day meeting dated on 23rd of October, Sunday, but it was upon request of German Chancellor Merkel, was extended to 2 days. Still big disagreements between the Eurozone members in the way of handling the current crisis and the steps to be taken in order to tackle the crisis in the best way, giving the prospects for the comprehensive deal actually to resolve the Eurozone debt crisis still dim, as the deep disagreement remaining on critical aspects of the potential agreement, and this includes also the way of giving the regions bailout fund greater firepower. EU officials and European diplomats are actually lowering expectations of breakthrough when the 17 Eurozone leaders meet, despite the recent Franco-German assurances that comprehensive solution to more than 2 years of debt economic turmoil would be found by the end of the month. This was also boosted by yesterday's rumors of cancellation of today's meeting that were circulating in the markets that actually pushed the euro to the fresh day's low yesterday at 138.50. While there appears to be broad consensus on the need for around 110 billion euros to be injected into the European banking system to help it withstand the potential Greek debt default and the wider financial contagion, there is a little clarity on either of the other two critical parts of the plan. The first element involves scaling up the region's 440 billion euro bailout fund, known as the European Financial Stability Facility, EFSF, and the other is focused mainly on reducing the Greece's debt burden by deepening the losses private investors, major banks and the insurance companies that they must take on their Greek bonds. The EU leaders will consider two methods for scaling up the EFSF. The one will be by using it to offer guarantees to purchasers of Eurozone debt, and the other is to use part of its capacity to set up a special purpose investment vehicle that would attract money from the sovereign wealth funds and other investors to buy debt. They might also agree to combine both options, so today's actually meeting will give us some more put some more light in these ideas. The financial markets have been hoping for weeks that Wednesday's summit, due to start today at 1500 GMT, with the gathering of all 27 EU leaders, followed at 1730 GMT by the meeting of the Eurozone heads of states, will produce actually the detailed figures on how to combat the debt crisis. There is now little likelihood of concrete numbers. Sources are saying, with analysts expecting still to have some more results actually in the November's meeting. As I mentioned, the markets remain steady, euro holding above 139, cable above 160 after hitting this morning fresh high of 160.39 and keeping the near-term positive tone. Dollar yen is at the back foot. Yesterday marginal low at 75.73, marginal fresh record low was posted, while dollar Swiss is also heading south and approaching some critical levels. The main beneficiary of all these movements was actually gold, that rose nearly 1% yesterday to its highest levels in more than a month, as safe haven demand returned on growing doubts over a resolution of the Eurozone debt crisis ahead of today's key European Union summit. The disagreement actually that bursted yesterday in that I earlier mentioned, the rumors of possible cancellation of the meeting, turned investors into the most safe haven instrument, gold, and we'll see later on the technical part how the gold acted and actually broke above some critical resistance levels and still heading higher. The crude oil also remains well supported after yesterday's rally, extended gains to the levels of $94.50 per barrel, correcting lower on technical trading, and back to strength. On the technical part, we will see what levels are to be watched today. The crude oil is also awaiting today's U.S. Crude inventories that are due at 14:30 GMT, with the forecast for today on crude oil stocks to grow by 1.3 million barrels, while gasoline stocks are expected to drop by 1.6 million barrels. From today's calendar, highlights of the day are, apart from the Eurozone Economic Summit, that is all-day event and is the main focus for today, at 9 o'clock, at 10 o'clock, pardon, the GMT, the CBI industrial expectations, order expectations from UK, -8 is the forecast for today versus -9 the previous month. And then from states we have series of economic indicators due at first come at 12:30, which are core durable goods orders monthly. Expectations are positive, raised by 0.5% compared to -0.1% previous month release, and the durable goods orders monthly are expected to decrease by 0.7%, worse than last month release at -0.1%. At 1400 GMT, the new home sales from the US expected slightly higher at 302,000 compared to previous month release at 295,000. And crude oil inventories are due, as I mentioned, at 14:30 GMT. Now let's take a look on the markets and see the latest movements in the markets. The euro, pardon, we are in. The euro holds a positive tone, as yesterday's gains peaked at 139.59. Currently it's consolidating, but remains well bid above 138.50, which is also close to 38.2% Fibonacci retracement of the latest leg higher from 136.55, which is the stronger short-term support and the higher platform seen on the 4-hour chart. And while holding above this level, of course, with initial support at around the 139 zone, the focus remains on the upside. Clearance of 139.59 opens way for test of 140 level, which is Fibonacci 61.8% of the broader downtrend from 145.48. And then we have the key barrier, 200 days moving average on the daily chart, currently standing at 140.93. Break above these two barriers is expected to turn the medium-term outlook more positive and refocus upside levels above towards 145.48 and the yearly high at 149.38. However, holding below 200 days moving average will still keep the negative outlook, medium-term outlook from 145.48. So we are watching on the upside. Of course, the euro has been driven mainly by news in past couple of days, and basically today's also event, Eurozone summit, is going to be the main driver of the pair. From technical point of view, these are the levels that are important and that will be obstacles on the upside for the pair. However, the positive release from today's meeting will definitely give more boost to the pair, and we might expect it to test these levels, especially the 200 days moving average. The daily outlook is regaining a positive tone as the both studies are above their midlines. However, the 55 days moving average is still in the mode of downside to neutral, while the 20 days daily moving average is turning higher and supporting the current uptrend of the pair. Back to the short term, currently the neutral trading on the hourly chart as the pair moves within the narrow range and holding above and below the 20 days moving average. So directionless, and most likely expectations, unless some unexpected news come meantime until the results of the outcome of the Eurozone meeting, to hold this a steady tone, and then the new direction would be likely established. On the upside, as I mentioned, watch 139.55, 140, 140.93, while on the downside, the initial support 139, 138.50, and 138.20 also. The key support on the short term is 136.50, below which would turn the immediate tone more negative and signal temporary top. Cable remains well supported after initial rally on Friday through 158.50, which was the ceiling of the short-term consolidation range. Extended gains this morning. A fresh high was posted at 160.36, keeping focus on the upside with the positive hourly and 4-hour studies. However, the overbought conditions might suggest corrective action preceding the fresh rally. Daily studies are turning positive with the strong momentum, looking for upside extension towards 161, 61.8 Fibonacci retracement of 166.17 to 152.71 down leg, and then also 200 days moving average at 161.36, above which to focus levels into 162 and 163 initially as figure resistances. On the short term, 20 days moving average on the 4-hour chart currently at 159.59 underpins this rally. 159.55 also is the initial support low of yesterday, ahead of 159.00, where is also the short-term trend line, bull trend line drawn of 152.71. Loss of these levels might signal further extension and test of the consolidation band of 158.50, 156.30, with the higher platform at 156.30 offering a key short-term support, below which would turn bearish. Dollar yen is again losing traction after the posting initial record low at 75.80 on 21st of October. Initial corrective attempt was capped at 76.50, which is the floor of the previous consolidative range, and the series of lower highs and lower lows are keeping the focus to the downside. Yesterday's brief break through 75.80 posted the marginally fresh record low at 75.73, with focus still on the downside as the near-term studies remain weak, and the 75 level as a figure support would be test of 75 figure support would be the likely scenario on the downside. However, As mentioned in previous session, the possible intervention of Bank of Japan is still pending, and unless this happens, the upside attempts face barriers at 76.30, 76.50, and trend line resistance currently at 76.87. That would be capping any non-intervention rallies on the upside. In case of intervention, then we can expect some stronger bounce and likely to test levels above 78 minimum, which would temporarily improve the broader downtrend of dollar yen as seen on the chart. Continues on the long-term chart. The pair remains in the continuous downtrend. Dollar Swiss is, as mentioned on the announcement, maintaining a weak tone, and this morning's dip to 87.58 is actually approaching 200 days moving average, currently standing at 87.42, below which would further weaken the short-term tone, as already lost completion of the head and shoulders pattern and break below the neckline at 89.20, also the previous strong support, as well as loss of the main bull trend line drone of 70.67, 9th of August, fresh historical low of dollar Swiss, weakens the tone. Current break through the first Fibonacci support at 23.6%, and now looks for test of 87.46, the 200 days moving average, below which opens way for a test of 86.46, which is the low of 15th of September. And further down we have 55 days moving average at 86.06. On the upside, 88.80, the previous previous low of 17th of October and the high of 24th of October offers initial resistance. Before this, 20 days moving average on 4-hour chart at 88.30. However, only break above trendline resistance drawn from 93.13 high, currently at 89, 85, 86, would improve the tone, but break above 90.81 is to put the bull short-term bears on hold and possibly refocus the upside levels towards 92 and 93, 93.13, which is the recent high of 6th of October. Commodities, as mentioned, gold is in a strong rally after yesterday's uncertainty about outcome of Eurozone. Today's meeting prompted the investors into safe haven gold and pushed the yellow metal sharply higher. Break above the previous high at 1695 and the clearance of 1700. The barrier has so far seen approximately 1720, ahead of 50% Fibonacci retracement of the broader downtrend from 1920 down to 1532, currently at 1725, above which we have the 55 days moving average at 1743. The downside remains well supported as the 4-hour studies are firmly in the positive territory. However, overbought conditions on the 4-hour and also our hourly studies might suggest a corrective pullback ahead of a fresh rally. Initial support at 1700, 1695, while only loss of 1650 would soften the current positive tone and turn focus lower. 20 days moving average at 1662 currently underpins the current advance. Crude oil extended its gains, better seen on the daily, to come close to 50% Fibonacci retracement of the broader downtrend from 114.80 down to 74.94. The level is at 94.85, where also the 200 days moving average stands, so we have the strong barrier here. However, as mentioned yesterday, based on the wave principles, the pair is currently trading in extended C corrective wave with the 95.40, which is 138.2 Fibonacci extension seen in focus. However, the first obstacle comes at 50 days moving average and 200 days at 95.85, above which we'll look for test of 95.40 and 90. Then comes 99.50, 99.45, the 61.8% Fibonacci retracement. The shorter term outlook sees the still positive tone as the 20 days moving average underpins a current rally. Initial support comes at 92.30, zone ahead of 89.66 previous high, while only loss of 85, I would say, level would weaken the current bull structure.